Hey everyone, welcome back to our channel. Today, we are diving into a topic that's crucial for many small business owners and independent contractors: overcoming an IRS audit that incorrectly attacks your deductions. If you or someone you know is dealing with this, stick around. We've got some valuable insights for you. So, let's set the scene. Imagine this: you and your spouse are being audited by the IRS. The examiner disallows your spouse's miscellaneous expenses because there's no written statement deeming them ordinary and necessary for her job, and no list of required expenses. Sounds stressful, right? Well, it doesn't have to be. Let's break it down. First things first, your spouse is an independent contractor, not an employee. As a sole proprietor, she reports her business income and expenses on Schedule C of her Form 1040. The key here is understanding IRC Section 162A. This section states, "There shall be allowed as a deduction all the ordinary and necessary expenses paid or incurred during the taxable year in carrying on any trade or business." That means, to deduct these expenses, your spouse doesn't need any statement signed by anyone. She also doesn't need a separate list of such expenses because they're already listed on her Schedule C. Now, here's where it gets interesting. The IRS examiner might be confused, thinking your spouse needs to capitalize some assets rather than expense them. This could be why they're asking for written statements. If that's the case, they're likely looking for the special $2,500 expensing election, which does require a written statement. The $2,500 expensing election is crucial for sole proprietors to deduct certain expenses immediately rather than depreciating them over time. If your spouse hasn't made this election, it's worth looking into. So, what should you do if the IRS is giving you a hard time? Here are a few steps you can take. 1. Provide evidence. Make a copy of your spouse's 1099 and give it to the examiner. 1. This can clarify her status as an independent contractor. 2. Request a supervisor review. If providing the 1099 doesn't work, ask to speak to the examiner's supervisor. 2. Sometimes, escalating the issue can help resolve misunderstandings. 3. Stay informed. Keep up with the latest tax laws and elections that could impact your deductions. 3. Knowledge is power. Remember, the key is to be proactive and informed. The IRS isn't always right, and it's your right to challenge incorrect audits.